Tonight's topic is small business startup. When setting up your own business, you may have questions about choosing the appropriate business structure, intellectual property issues, taxes, human resources, and any number of other important details. Good evening, and welcome to Lawyers on the Line. I'm Stephanie Balmer, a partner with the Falsani, Balmer, Peterson, and Balmer firm, and this evening's moderator. I'm pleased to welcome our panelists, Steve Nyes, an attorney with the law office of Mark T. Signorelli, Yvonne Novak of the law office of Yvonne Mishad Novak, and Joel Colquist, a certified public accountant with Colquist Seitz and Goldman. We're ready for your questions on starting a small business. Call locally at 218-788-2844, or if that's long distance for you, you can call our toll-free line at 1-877-307-8762. Well, we already have a question, which is pretty straightforward. Do I really need to talk to an attorney or an accountant if I want to start my own business? Is it something people can do on their own? Steve, you want to start?
Sure. I think the operative word there is need. And do you need to talk to an attorney or an accountant? No, not necessarily. It's something that you could definitely do on your own. You can go to the Minnesota Secretary of State's website and either download a form or log in and fill out a form online. And, if you do it online, it takes all of 5 or 10 minutes. And you'll get a congratulatory email from the Secretary of State saying, well done, you've just formed your own LLC, or you just incorporated your own corporation. So there's a lot of reasons why you might want to talk to an attorney or an accountant, but you could do it on your own if you want to.
Okay. Joel, what about this issue about an accountant? How complicated are the numbers behind forming a business?
Well, I think it's very important to speak with an accountant or a CPA before you start your own business, particularly because if an individual is about to start his own business, it's a big financial commitment on their end. They do it in order to seek a profit. And I would always advise somebody to really start a business plan or create a budget so they know what they're getting themselves into before starting this business. Being able to review that with a CPA or an accountant can give you insight into whether it can be accurate. Maybe they're missing some expenses that they're not aware of that they may incur. That would give them a better idea if they need to adjust pricing or something regarding their service. And I think it's just going to give them a clearer picture of what kind of financial impact this business decision is going to get them into and whether or not it's going to be profitable. So I think speaking with a CPA beforehand can certainly assist them in that manner.
Okay. Another question, Yvonne, is do I need to form a corporation or a limited liability company, or LLC? Can I just be a sole proprietorship? What would you say to someone asking that question?
Well, the reason that you would form an S corporation or an LLC is so that you can get legal liability protection and financial protection from the debts of the business. If you just hold yourself out as a sole proprietor, you can be responsible for the liabilities of the business and the debts of the business.
Okay, so you're exposing your personal finances and all of that?
Correct.
Okay. Okay. Here's a question. After I form a business entity, do I need to do anything else, or am I good to go? So Steve, you mentioned, you get this nice email. What happens after that?
Well, that depends on you. One of the reasons you do want to do additional things, even if you're planning on operating your LLC or your corporation just as a sole proprietorship with that liability shield there, is you want to take those extra steps of having an operating agreement or having a shareholder agreement, keeping track of minutes of meetings and making sure you have a separate bank account for the company, because all of those things are factors that are going to help you maintain your liability protection. And Stephanie, we're talking about liability protection. You're an excellent plaintiff's attorney. If you were suing someone who owned a limited liability company, would those be the types of things you might look for?
Yeah, absolutely. When we have a named defendant in a case, one of the first things we do is look at insurance coverage, assets, things like that. What is the business structure? Who's the properly named defendant, and so forth. So that's a really good point.
Yeah, I would even say as an accountant, one of the first things I ask for in a new client is their operating agreement or a member's LLC agreement. because that information is going to help me or assist me in filing their taxes, so I know maybe how income is going to be allocated, what kind of agreements they've made between those partners. That information is important to us as CPAs, so we can properly file those taxes. The other thing I would just like to point out too, when we talk about starting up a new business as far as taxes go, is individuals need to be very aware of things that are like sales tax and payroll taxes if you're going to have employees. Those kinds of taxes become due almost right away. As soon as you start paying an employee payroll or wages, you can have a payroll tax liability. Or as soon as you start having sales, there may be sales tax that's related to that. So I just think it's important for individuals to be aware of some of those kinds of taxes that aren't due at the end of the year, but can be due right away as you start your business.
Yeah, and I'd also add that having an operating agreement or having a shareholder agreement is something that a bank will ask you to produce if you're looking to get a bank loan to help fund this business. Just like they're also going to ask for your business plan, which is another reason why you want to talk to an accountant like Joel.
All right. Yvonne, here's a question. Wasn't there a big change to the law about limited liability companies in Minnesota recently?
Yes, there was. Limited liability companies in Minnesota used to be treated like corporations, and now they're treated like partnerships, and that's a tax change. I think that Joel could probably address that more, but it's basically that they're treated more like partnerships now.
Yes, as an LLC, you actually have the option to be treated as a partnership, or you can actually make an election to be taxed as a S corporation. They both will be reported, the income of that business is reported on your individual income tax return. So they're pretty similar in that regards. Yet they do have differences in the fact that in S corporation you have to pay yourself wages, where in a partnership there is no wages paid to the owners. They're actually more or less guaranteed payments. And so the way that it's structured is different in that way.
All right. Here's a question from a caller. If a person wanted to make salsa out of their own garden, a nice spin-off from the previous show, does she have to go under the, I think this says either cottage food law with Department of Agriculture? Does anybody know anything about this? This is a new, I've never heard of this.
I don't know, but what I would say is that this raises a very good point, that if you do want to go into business for yourself, you should always check and see if there are any licensing regulations, either at the state level or the local level.
That's what you're hearing in this question, maybe.
Yeah.
Okay, that's a good point. Okay, and maybe another reason to talk to a lawyer. Okay, let's see. What is the difference between an S corporation and a limited liability company?
An S corporation is a corporation. We think of it as a small corporation. It's just an election that you've chosen how to be taxed. It's a flow-through entity. The income of the business flows through to your individual tax return. A limited liability company, you have members instead of shareholders. It's a little more flexible in its organization, and it's a newer entity, so there's less case law. They're handled a little bit differently tax-wise. They're both flow-through entities. There's a lot of similarities, but a couple of big differences.
Okay, and when you say case law, as far as the rules that are enforced in the governing and management of these companies, we have statutes and regulations, and then we have decisions from judges throughout various levels saying, in this situation, this is what should be done and so forth.
Right, and most of the case law that you'll see out there is based on fights among the shareholders or the members as the business is breaking up, and that's where you get into whether there's a shareholder agreement or a member control agreement that you set up when you start the business, defining how the business will break up or how a shareholder or a member will leave the business, because it's a lot easier to do it at the start of the relationship than when everything is falling apart.
That's very true, and I think we should mention too that like Yvonne was saying earlier with the change in the LLC law, You know, the LLC laws and the corporation laws in some ways give you your own rules of the road, your own operating agreement for an LLC, for example. But some of the changes in the LLC law are a bit different from what you might expect. For example, you might think that it's just a given that you need to have your operating agreement written down. But in Minnesota, that's no longer the case. An operating agreement doesn't need to be in writing. It can be oral or implied or anything else. So one more reason to make sure that you get everything written down and agreed upon, because it will help prevent fights later on down the road.
So what I'm hearing is that this is a little bit like, you know, going into a marriage. You want to believe that everything's going to be great and you're never going to have any problems. But if, you know, in a business situation, if you want to protect yourself and make sure everything goes as well as possible, it's best to put this stuff together ahead of time and to get it in writing, ideally. Okay, great. Here's another call. Well, it's probably somewhat related. I've heard that the new tax act penalizes my small business. Is that true? Joel, do you want to take a crack at this?
Well, I would first off say it depends.
It's a lawyer answer, not an accountant answer.
I know. Well, in accounting, there's a lot of gray areas. What I think I have seen at this point is that the new law for small businesses is called the 199A. Can actually provide for most businesses a deduction up to 20% of the income of that entity. And that's actually a pretty big deal for a lot of small business owners. However, there are exceptions to certain entities which seem to be more service related. Lawyers would tend to fall into that category, as would accountants. The medical field generally falls into that. It's more for people who have to use their own skills and services in order to make their money. Those individuals, if they make too much money, will not qualify for this 20% deduction. Having said that, though, it is a 20% deduction. So if you made $100,000 through this business, $20,000 of that would not be taxed, and that's a big deal for a lot of individuals. So I actually see this as being pretty beneficial for most people. But yes, I guess to some extent, there are people who are not getting this tax break that other people are, and there are other parts of the new tax law that can be not beneficial to them too, where they actually may end up owing more taxes, say in 2018 than they did in 2017.
Okay.
May I follow up with a question for Joel?
You absolutely may.
So there was a change to the C corporation tax rate too, right? That dropped quite a bit.
Correct. That dropped to a 21% flat rate.
And so in your experience, are there situations where a C corporation would make more sense for certain people, certain businesses?
From what I know, C corporations kind of used to be a thing of the past, and that was because they would have a higher tax bracket, and a C corporation really contains a double taxation is what I would say. That is because the corporation in general gets taxed, and then in order to get the money out of that corporation, you need to issue a dividend to that individual, and then that individual gets taxed as well. With the rate going down to 21%, that means the corporation is now paying a 21% federal tax rate, and when that dividend goes to the individual, it is more than likely going to be at a 15% tax rate. So overall, that income is being hit at 36%. For most high-income taxpayers, they would be at 36% or lower. And so now C corporations are going to be more beneficial than they were probably last year when those tax rates were higher. I'm not sure at this point whether we'll see more companies going towards the C corporations because LLCs and S-corps have been such a big hit as of recently. I think that's yet to be told, but I think there is a lot more advantage as far as income taxes go with the new tax law.
We have a caller who wants to know the difference between an LLC and an LLP. Yvonne, you want to take a crack at that one too?
Sure. An LLC is a limited liability company. An LLP is a limited liability partnership. Right now, with the change in the LLC law, I don't know that there's a significant difference between the two because LLCs are being treated like they're partnerships.
Okay.
Yeah,
Steve?
I think that's a good point. I think we should also probably point out that there's such a thing called a common law partnership. And so if you take your guitar, guitar to a coffee shop and play some songs, as a sole proprietor, that's one thing. If you and a couple of friends get together and take your guitars to a coffee shop and play some songs together and say, well, we'll just split the tips and the 5% of the till evenly, well, it's arguable that you've just formed a common law partnership, even though you didn't actually go onto the Secretary of State's website and form your own entity. And that common law partnership has its own set of rules among the partners and how they interact with each other.
Okay. A caller wants to know how they go about selling their interest in the small business. Anyone want to take a crack at that? I mean, if you're, I suppose it would depend on the type of business, first of all, right?
Well, you can't sell it like you sell stock on the stock market.
Okay.
You're prohibited from selling it that way.
All right.
You can sell your interest in the business or your stock in the business to a private individual or to another company, but it's not like you call a broker and say, I want to sell my stock. You sell the business and by disclosing, kind of like selling your house. You work with a purchase agreement that you negotiate the terms of, and depending if you have other members, other owners, you have to come up with an agreement with them before you turn around and sell it.
Okay.
Yeah, and we should probably point out that you might not be selling the business per se. You might not be selling Stephanie's super awesome sidewalk shoveling LLC. The person who's buying the business or wants to buy the business may instead want to buy the business assets, all the shovels in your sidewalk shoveling company instead.
The reason they would do that is that they don't want to buy your liabilities.
Right.
Okay.
They just want your assets and your clients.
Okay.
And I think a lot of times too, it's important for people that are going to be either selling the business or buying a business to actually go through some sort of business valuation. What that basically does is it gives you a good sense of what you're paying for that business. Is it at a fair price? Accountants can really help out with that process because you want to know what this business, what kind of income does it generate? What kind of expenses does it incur? What am I going to pay for this, and is this going to be profitable for me too? So I think it's important to go through those steps, and much like you guys are saying, whether or not this sale is going to be an asset purchase or sale or a stock purchase or sale can have an effect on the taxes that are related to it as well. And so that can actually change the amount that you're willing to pay for it up or down depending upon the type of sale that's going to occur.
A possibly related question, well, you're speaking of taxes. A shareholder of a C Corp was taxed on profits she never received. How can that happen and what can be done about it? Why don't we start with Joel? You can explain a little bit about how that could have happened and then maybe the lawyers can discuss remedies.
Well, a C Corp is an entity in and of itself, and that entity is what is taxed. So as a shareholder of the C Corporation, none of the income of the corporation should be taxed to you individually. The corporation incurs that tax and pays it. The only tax that then comes to you as a shareholder of the C Corporation would come through the way of dividends. If you get dividends as reported on your individual tax return, and you would pay tax upon that, generally at a 15% per se tax rate. But the profits of the C Corporation do not get passed down to an individual in and of itself. It's taxed by the corporation.
So, I mean, the way this was described maybe happened a little differently in reality.
That would be my best guess, yes.
Okay. Okay. Well, let's move on to the next question then. One question is, where can I get more information? So if we have some viewers who are just not at the calling an accountant or calling a lawyer stage yet, what are some resources that people who are still contemplating starting up their own business can look to?
The Center for Economic Development that University of Minnesota Duluth sponsors is a real good resource. They will help you with the market plan. They'll help you with planning the financial side of the business, getting it set up. They're located in the Tech Village.
Okay.
The Secretary of State website has a lot of information on it. The Department of Commerce has information on it.
Yeah, the Minnesota Department of Economic Development has some excellent free resources. You can go online and download a very thick, or I guess if you're downloading it, it's not thick. But if you order the print version, it's a pretty thick book called Starting a Business in Minnesota.
Okay.
They also have other resources regarding intellectual property, an employer's guide to employment law in Minnesota, a whole bunch of free information. That's a really great reference.
We haven't talked too much about employment issues, and I don't believe either of you at least hold yourselves out as employment experts. But, you know, for people who, again, are looking to dot all their I's and cross all their T's and starting up a business, do you think it's a good idea to consult an employment attorney, or do you think that's something that can be kind of figured out as you go? What would you tell clients who came to you for, you know, forming the business and doing the arrangements, and they said, do you think I need to talk to a lawyer, or do you have any resources?
Well, I think the first question is, do they plan on having employees?
Sure.
Or do they plan on hiring independent contractors? And that distinction is a pretty important one because it's got some tax consequences. You know, if you're a sole proprietor, you might not have filed for your state and federal tax ID number right away if you didn't plan on having employees. But if you do have an employee, that's one of the things that automatically triggers the need for a state and a federal tax ID number.
Yeah, and I would even say it's actually independent contractors and employees is a pretty big deal with both the IRS and Minnesota Unemployment, or I guess your state unemployment agency. The reason for that is as an employee, you get paid a wage, and your employer will then withhold your federal and state income taxes, but then they also withhold Social Security and Medicare tax, which I've kind of consider, we call it FICA, but the other half of that is your employer also matches that in the Social Security and Medicare tax. So it's about 7.5% for the employee, and it's about 7.5% for the employer. Now, if you were to have independent contractors, you are basically passing that off to them and making them pay that on their own, because if you are self-employed, you also have to pay this, what we call the self-employment tax, which is the Social Security and Medicare tax, but you pay it twice. Once as the employee and once as the employer. So the IRS wants to get involved because they want to make sure that the proper people are paying this tax. And from a state level, the unemployment agency will get involved because if you are an employee of that company, you now have to pay unemployment taxes on these wages. If you're self-employed, you don't. And so they get involved too to make sure that they are getting paid the right amount of tax for these employees.
And that's a particularly red flag issue in the contracting industry. They have very onerous rules if you hire somebody and they're not a separate entity. Hiring somebody as an independent contractor, if they are not an LLC or an S corporation, can subject you to very stiff fines and penalties. So as a contractor, you really want to be careful. And that's oftentimes small businesses that come in to talk to me.
Yeah, that's a good point. And it's important to have a very carefully crafted independent contractor agreement in those situations that you can point to and say, my employer didn't have control over me.
Well, I think what another issue we have here, though, is workers' compensation insurance too, right? That goes along the same lines as far as, you know, if you hire someone as ostensibly an independent contractor and then insurance disagrees, or the state of Minnesota disagrees, the employer or business itself can be socked with additional penalties, right? And exposure. We have, I think, time for one last call here. What if my spouse and I jointly own a second house and rent it to college students? We don't need to form a business and file a partnership tax return, do we?
I would say no, you do not. You can actually just file that the income from that rental of the second home right on your personal individual tax return. It's filed as a Schedule E. I think you just need to be aware that there are certain rules depending upon how much personal use you have of that second home, where it may now qualify as a vacation rental, which is treated differently than just a straight rental where there's no personal use. So just be aware that there are certain tax rules depending upon how much personal use you have within that rental house or second home, how much you're actually renting it to other individuals. In this case, if you're renting to college students, I'm assuming that they're there for 9 months, and it's probably going to be at least a vacation rental, if not a full rental house. But as far as it being between you and your wife, you can put that straight on your 1040 Schedule E.
So, and we get a lot of that up here around the colleges, a family and out,
Snowbirds going to Florida.
Yeah, and then we also have parents elsewhere buying a house in the Duluth area and renting it to their kid, renting it, and the kid's friends. How would that square? I mean, would you apply the same analysis as far as how much time the parents are spending in the home, or because it's to the benefit of their son or daughter? I mean, what kind of factors would go into that?
Well, I just think that it's one of those deals where it may be actually advantageous for the parents to buy this house. They're basically, their child now gets to live there rent free. Depending upon what you have to pay for it, you may actually make money out of this. College areas are highly sought after for rentals, and so there could be a great business opportunity. Having said that, sometimes those houses can be a little bit more expensive because of that opportunity too. So.
Okay. Well, that's all the time we have. Please join us next week when we answer your questions about estate planning. I want to thank our panelists this evening and thank you for watching. I'm Stephanie Balmer. Good night.